Alright, guys, so things are looking really challenging for Trump. Everything he's trying to do, both on the tariff front and in geopolitics, is collapsing. Now, I know we use that term a lot, collapsing, but the world is pushing back and a ton of blowback effects are starting to stack up. And the first is China pushing back. It's quite funny because we all know this was going to happen. Now, if India had the backbone to shift closer to BRICS, it's 1,000% that China won't fold. And what did we say? China is defying what Trump wants. Well, you want us to stop buying Russian oil? Well, we just aren't gonna do it. Beijing's defending their imports of Russian oil as legitimate and lawful. It's all about energy security measures and defending their national interests. And the last thing they want to do is to buy US energy. Now, if we look at all the past trade deals, there's a pattern, my friends. It's either buying more Boeing planes from Trump or buying expensive US LNG. And tell me if it's going to be any different. Should China cut away Russian oil, it won't be a good situation. It's actually worse than a triple digit tariff from Trump. Cutting away Russian crude would mean higher prices across the board and a big blow to Chinese industries. And let's understand the gravity of the situation. China today takes up 47% of total Russian crude. That's an enormous amount of energy, and if those barrels can't find any takers, the prices will spike. Now, crude could jump up to $20 a barrel, and that's why Trump wants Russian oil cut off from the global system, so that the world, including China, will have to buy more expensive energy, and maybe, just maybe, buy American crude instead. But it just won't happen. Now, firstly, Chinese refineries are perfectly set up for Russian crude, especially those from the Far East, and right now they are buying at a very nice discount. There's simply no way they will let this go. The tariff war is a golden chance from Trump to boost their exports to the world. The more the trade war continues, the cheaper China can produce stuff, the faster they can grab market share from the Americans. The July export numbers are out, and what we have been saying for months is coming true. In fact, it blows out all expectations. The trade war has really been lost from the American perspective. In July, China's exports rose by 7.2% year on year. The forecast was 5.4%, which is already massive. But in reality, Chinese exporters sold a whole lot more of goods to the world. Exports to the US have fallen yet again, but it doesn't really matter. If Europe, Asia, and the Middle East keeps buying from China, US markets can be bypassed. Now, Trump wants to boost US exports, however, it just won't happen. Now, since 2023, we all remember what Blinken and Yellen has been saying about China. In fact, it's the same thing that Bessent is now saying about the Chinese economy as well. That Beijing should start producing less due to overcapacity. At the same time, China should start buying more stuff from the world to build up their own consumer class. And we've heard this one before.
China's current economic model is built on exporting its way out of its economic troubles. It's an unsustainable model that is not only harming China, but the entire world. China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs.
However, there's a second option. China doesn't need to sacrifice their export base or manufacturing capabilities. They are reaching a point where the country is wealthier both domestically and industrially as well. Now, what the US wants is for China to sell less stuff to the world. Why? So that Trump can sell more US goods himself. It's a zero sum game, guys. There's a finite amount of supply and demand in the world. But thanks to the Chinese ecosystem and a growing middle class, they can effectively do both. It's being reflected directly in the numbers. Now, China's imports in July rose by an incredible 4.1%, almost 4 times the demand increase in June. They are buying so much until they manage to push down their own trade surplus by $17 billion. And look at it from this perspective. It means the world is exporting less to the US while exporting more to China, We are seeing the growth of a market that can buy more and sell more at the exact same time. The issue here is the opportunities for de-dollarization. Now, the more the US loses market share, the more dollars will get dumped in exchange for other currency settlements. Now, this chart is important. It shows the declining importance of the US in global GDP and exports. Now, since the 60s, it has been dropping year after year after year. And in tandem, the dollar share of FX reserves has also been dropping. It makes total sense here, especially when China's trade continues to grow. Now, when Chinese exporters sell stuff to the world, they will invoice either in RMB or local currencies of the buyers. Simple enough, but when Chinese importers buy stuff, they would want to pay in the RMB. So, on both sides of the equation, you have de-dollarization written all over the place. And once we understand this, we'll understand why the US wants to stop China from buying Russian energy. It's all about slowing down the Chinese industrial machine. Now, sure, stopping Putin's revenue might be on the agenda, but it's not the main cause. That's just to put pressure on Russia. Meanwhile, we have to go deeper about the huge amount of T-bills being sold by Scott Bessent. Now, the amount is mind-boggling. It just points to more dollar devaluation and why a further drop is rather likely. Now, the Treasury plans to sell $100 billion in 4-week bills, very short-term bonds. As mentioned before, Bessent can't afford to borrow money on the long end without blowing up the entire system. And the desperation is starting to pile up because of so many liabilities. Now, beyond just Social Security, Medicare, and defense, trying to fund Trump's reshoring plan is going to cost a ton. The plan is to boost US growth, increase government revenues, and eventually lower the overall deficit. But how is that possible when you keep borrowing money while waging a trade war with your bond buyers? Just think about it, it's quite crazy, isn't it? If we look at the biggest bond issuance in recent history, one trend is forming. The biggest issuance before this one was in 2023 for $95 billion. But look at the amount of record breaking auctions in 2025. We have 5 auctions with the biggest hitting 85 billion. And this is only going to continue. We still have 5 more months left to go. And this brings us to another realization. We need to remind ourselves again, the US cannot afford to borrow these amounts of money at these rates without blowing up the national debt. And there are only 3 ways to escape this disaster. Now, the first is to force the world to buy bonds. We might come to that, but that's going to be a financial nuclear button. And the second is to get the Federal Reserve to print money to buy the bonds again. Now, that's another nuclear option, otherwise known as QE. It happened before in 08, happened before in 2020, and look where it got us. And the only way left is to force the Federal Reserve to drop rates. Now, JP Morgan is expecting the Fed to cut rates in September in just a month's time. Rates are expected to drop by at least 25 basis points. And it doesn't matter how Trump makes it happen. Maybe he fires Powell, maybe he replaces all the governors with his people, or maybe he just threatens the board again. It really doesn't matter. The fact that rates have to come down or the debt burden just blows up. Now, we are at the point of the national debt going officially past $37 trillion. This isn't even a joke. There's no way to keep borrowing money at 4% interest rates without the entire system imploding. And this is how serious the situation is. Since July, we are up by $780 billion, and this equates to an average rise of $22 billion per day. It's just incredible. And in the last 7 days alone, Scott Bessent sold over $720 billion over 10 auctions. So something has to break. Either the debt spirals out of control and takes down the global economy, or rates have to come crashing down. And as rates continue to drop, well, that just means the dollar will probably continue to weaken even more. So don't expect some miracle recovery in 2026 or even 2027. But let's shift gears a bit to the Russia US summit. Yes, the one in Alaska that's happening in about a week's time. And by now, we kind of know the lay of the land, don't we? Russia is gaining momentum in Ukraine, undeniable. The threat of US sanctions are empty and Putin is just chilling. To Russia, war is just part of the entire diplomatic strategy of negotiations. and Trump wants this more. He needs to score a win. But it probably won't happen. Ukraine, Zelensky doesn't want to see territory to end the war, and he doesn't want to give Putin anything. Now, to complicate things, the EU is backing Ukraine 100% on this. International borders must not be changed by force. And if that's the case, how can there be a resolution? Now, let's look from the Russian perspective for a bit. They have burned a lot of weapons, a lot of manpower, treasure, and suffered more than 10,000 sanctions. Now, we have talked about this situation extensively over the past 2 years. And let's not forget losing $300 billion of their national reserves. They are not going to just walk away. This is an existential conflict for them, which leads us to a terrible realization. The US Russia summit is probably going to fail unless Zelensky signs on the dotted line. And we saw how well things went down the last time he was in the Oval Office. Now, it should be mighty obvious why the US wants the war to end. Two reasons actually. Now, funding Ukraine is a black hole, and the US doesn't want to repeat what happened in 2022 all the way to 2024. Now, they have spent an incredible amount of money on the war. Right now, the EU is funding the bulk of the burden, but if things continue, just think about it. Trump might just get sucked back into the fray, and he just can't afford it. Now, in total, Congress has passed over $170 billion in spending bills to fight the Russians. As of today, the total amount spent is $128 billion. There's no conceivable way for Bessent to borrow more money to wage round two. So this is a get out card to exit the situation. Now, Putin has told the US he'll stop the war for eastern Ukraine, and this is according to the Wall Street Journal. Now, is it true? Maybe it is, maybe it's not, but it's a price Trump is probably willing to pay. There's also another reason, and it's access to Russian minerals. Now, if we look at rare earths, there are only a few countries that have good access to it, and most of them are in BRICS. The majority, of course, is controlled by China. Brazil and Vietnam are also very, very friendly to China. But Russia also has more than 10 million tons worth, and that is vital supply Trump wants access to. And notice how Russia dodged the brunt of US tariffs, and I don't think that is by accident. So, getting a peace deal done is vital not just for US spending, but for US industries as well. Because Europe has cut themselves away from Russian resources, well, all the more better for Trump, isn't it? He gets to buy more for less. But will a peace deal come from the Alaska summit? I don't know, but I doubt it. Because in the end, if Ukraine doesn't play ball, the EU is still committed against the Russians. But let me know what you think. Is the trade war actually helping China? And why is Trump trying to end the war? What's the big play here? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.